Welcome back to NTD Asia Brief. Now here's Shelley Jung with our Asia Market Report. Shelley, tell us what's happening.
Well, Anna, to many it seemed like a one-way bet as Shanghai's stock market has grown in the past few years. New investors ranging from taxi drivers to factory workers dumped money into stocks in a bid to cash in on the new capitalist structure. But that dream has recently gone sour. Shanghai's benchmark index has sunk by 40% so far this year, leaving investors dazed. Although some analysts had warned that the market would fall, many of China's newest market players did not believe that the party would end. Undergraduate student Lu Yi borrowed $1,400 from his parents to invest in the market. Today, he is less than pleased.
In January, I went on a mountain climbing expedition, so I didn't pay much attention to the market. When I came back, I was shocked at how bad the stock market was. So I felt it was not an appropriate time for me to sell my holdings, and I waited for a rebound to decide whether I should stay or leave the stock market. But the market didn't even give me a chance.
There's no question that the Shanghai market is one of the more volatile indexes in Asia. China analyst Jason Ma says that one cause of the market's unpredictability is the Chinese regime's unwillingness to let the market operate more freely.
At the very beginning, they want to get money from the kind of stock market, but they don't want to lose control of all the companies. So they set up about 70% of stock aside. That's a stock they can't use in the market. They only put 30% of the stock of company in the market, which can be traded. In this way, all the company is really kind of had trouble to evaluate their value. So,
according to Ma, the uncertainty over the true value of companies is not the only reason for disturbances in the market. He says that because of the lack of freedom and transparency, Chinese investors are caught in a cycle of speculation.
In Western countries, basically many people consider market as a long-term investment. It's something will have a better return than just to put money in the saving account. But in China, generally speaking, Chinese consider market as a gambling place because the Chinese regime, they totally control the market, and then there are a lot of uncertainty in the market, and the market is not really reflecting the progress of the kind of social kind of economy. So in this way,
Ma says that this mentality of short-term speculation only amplifies the volatility of the market, and it can be brutal for those who jump in when the market looks hot. Once a maid to a foreign family in Shanghai, Xue Qiaojin invested all her money in the market, only to see her savings wiped out.
With such huge swings and gains and losses, I feel the stock market is not healthy. It is like we get up to heaven and then fall down to earth so quickly. Some stock investors cannot take this. A lot of us are trapped now.
Chinese authorities have recently cut taxes on share trading in an attempt to encourage a rebound in the market. But for those left with no money, there is now no appetite for fresh bets on listed companies. That's all for today's market report. This is Shelley Zhang with NTD.